Well, it's customary for the NASBA's chair to report on the activity of NASBA for the past year, and I got an early start on that last week in Los Angeles at the AICPA's Fall Council meeting. Some of you were there, and what you'll hear today, a good deal of that is taken from the remarks that I made last week. It was actually very much a homecoming for me in Los Angeles. I was raised in Southern California. I went to college there. I took the CPA exam there, and I started my career there in the offices of Arthur Andersen. I actually took some time to visit that old neighborhood. It was only a few blocks away from where the hotel was. If those of you are familiar with it, it's the Staples Center area. It brought back a lot of memories to me. The firm is gone, of course, and so is the building that I used to work in, but my experiences still reside with me. I want to relate one of them that I also shared with the AICPA. An experience that I vividly remember was when I was promoted to new senior, and I attended the new senior training school for the West Coast in Pasadena. The firm brought in a guest speaker, and his name was Leonard Spacek. As many of you know, Leonard was the Andersen managing partner that grew the firm into the giant that it ultimately became. He took over for Arthur Andersen in 1947. The time he came to visit us, he was retired. But he was known for his focus on integrity, fairness, and especially his emphasis on the firm's motto, think straight, talk straight. Well, Leonard passed away in 2000, just 2 short years before Andersen closed its famous oak doors for the very last time. Andersen's downfall reminds us all of how an incredible reputation can be destroyed practically overnight. The fallout devastated many people, and some of them were my friends, and I'm sure that some of them were your friends too. Well, during the new senior training, Mr. Spacek told us that we were among the best and the brightest, and that our future was filled with great promise. But he also warned us that we would fail miserably unless we came to understand and live lives of integrity. In retrospect, his fears were so prophetic. If his successors had only thought straight and talked straight, the accounting world would be so much different today. Well, thank you for the opportunity to reminisce again 2 weeks in a row. But enough of that. I'm here to give you an update and something not quite as melancholy on a few of the more critical developments of the past year. First, I'll fill you in on some of the thinking behind the highly publicized standard-setting controversies that occurred, and then I'll touch briefly on some of the major developments that you will hear more about at our conference. As you know, we were engaged in a blue ribbon panel process with the AICPA and the Financial Reporting Foundation, the Financial Accounting Foundation, that led to the formation of a private company council that Russ just talked about. The Private Company Council is addressing the complexity and relevance of generally accepted accounting principles to try to make things more user-friendly for private companies. We agree with the AICPA and FASB that GAAP, as it has evolved, may not always meet the needs of some small private businesses. We promised you last year that we would closely monitor the PCC's activities, and I can tell you that we have kept that promise. In its first 10 months, the PCC, as Russ mentioned, has met 5 times. We've had representatives at each one of those meetings. I personally attended 3. Russ talked about the PCC's progress on a very ambitious agenda, and PCC Chair Billy Atkinson will further inform us this afternoon, I'm sure. The PCC's task is monumental, as it would be for any organization. And of course, the changes we are hoping for can't take place fast enough. But in the long run, a successful PCC will ease the burden of private companies in complying with US GAAP, which I remind you is still the world's gold standard. Historically, the AICPA has led the way with standards in the United States. State regulation followed, then federal after the Great Depression. This progression of regulators trying to catch up with the profession is unfortunate in one respect. There can be some confusion over the differing roles, authority, and responsibility of each group. On the one hand, there is a national professional membership organization with a substantive standard-setting agenda. Then we have regulators charged with enforcing those standards. With most professions, regulators set the standards that they are expected to enforce. In this profession, that has not always been the case. And so from time to time, there is some level of confusion. The mission of the AICPA is to support its members and strengthen the accounting profession, and rightly so. Is that to say that the Institute has no regard for public protection? Of course not. I served on the AICPA's Professional Ethics Executive Committee for 7 years. And while on the peak, I saw firsthand the professionalism of AICPA staff and volunteers, and of their concern for the public. In my current role, I have worked closely with Institute leaders and have the utmost respect for their abilities and their public interest focus. We meet with them several times during the year, and on a regular basis, NASBA staff and some of our volunteers are in regular and constant contact with them. These are good people, and we commend them for their service. On the regulatory side, there you are, the 55 boards of accountancy and NASBA. For us, watching out for the public well-being is a near sacred responsibility. Does that mean that state board members don't care about the health of the profession and its firms? Merciful heavens, no. While most state boards have non-CPA public members, the majority are practitioners like myself, and we get it. A healthy profession will provide public protection and vice versa. Public protection will result in a healthy profession. And so the logic is circular, and it works. In July, NASBA and the AICPA issued a joint press release indicating their commitment to the PCC's eventual success in developing a GAAP-based model for all private companies. The release also put to bed differences about the AICPA's new financial reporting framework for small and medium-sized entities that Russ touched on. The FRF debate helped me understand one thing that I think brought NASBA and the AICPA closer together, and that is realizing that when we challenge each other in good faith, it's a good thing, and it's healthy for the public and for the profession. When details about the framework began emerging, we expressed a number of legitimate and serious concerns, including suitability of use and the lack of disclosure differentials with GAAP. Because of the strong relationship and willingness of both sides to talk through and resolve those differences, I believe that the framework is much better today. Does this mean that NASBA endorses FRF for SMEs? No, but I'll explain. As regulators, we are charged with enforcing authoritative standards, and the framework is presented as non-authoritative guidance. We can no more endorse the framework than we could endorse any other comprehensive basis of accounting, like tax or cash basis. Eventually, the framework may end up filling the needs of some small businesses in certain situations. It may also put pressure on the PCC and FASB to speed things along. But whether there will be a long-term need for the framework remains to be seen, especially if the PCC is successful. Well, you may be wondering, where does this leave you and your board? Is there anything that you need to do? We don't believe so, at least not at this time, because changes have been or will be made to the framework to address the concerns that we made public. You know, the debate raised a larger question about authority in general, not just with respect to accounting standards. What is authoritative, and who gets to decide? And what about non-authoritative guidance? Are there different rules for it? And what about enforcement? Say, for example, what if a CPA advises the use of the FRF guidance that is unsuitable to a client's particular situation? Should there be any consequences? These are very tough issues. And I've appointed a standard-setting task force to study them in depth. Part of their charge is to question the current standard-setting role of state boards versus what it should be. This is a very complex issue that will require some heavy lifting. But you know, it needs to be done. It's time. One last thing on this, and then I'll move along. In dealing with the private accounting matter, I'll admit that I was shocked by some of the backlash. Some critics said our objections were only made under the guise of public protection. I'll repeat that since the statement is so incredulous. Some critics said our response was made under the guise of public protection. One person actually complained that we had not applied due diligence or due process in the matter. Talk about an interesting attempt at a role reversal. I don't need to tell this group that the very foundation, the very essence and purpose of boards of accountancy is public protection. Public protection will never be compromised on this, nor will there ever be a middle ground for it. We will speak out with your input whenever the public trust is ever threatened. That is the job of NASBA, just as it is for state boards of accountancy. Now then, there are many other important matters underway that you'll hear more about at this conference. There's a new UAA definition of a test that we've been working on that's been out for exposure. Why is that so important? Well, you know, that's the parameters of what is limited to what only CPAs can do. It's what requires licensure. It triggers things like peer reviews. It syncs up with the AICPA's Code of Professional Conduct and the definition of attestation there. So that's a major development. There's a ongoing discussion about firm mobility, and Ken Bishop will lead you through where we are on that later today. The compilation services standards is being rewritten, as you might remember from the regional meetings, and the concerns that were expressed there about independence and reporting are being incorporated in the revised standard. So we're really happy about that. Progress on amending and extending the uniform CPA exam contract is very close, and it will extend it through 2024. And let me mention another thing, a new committee, the State Society Relationships Committee, something that we're really excited about, has been organized. And I want to give credit where credit's due, and that's with Ken Bishop. It was his idea. He called me on the phone. He says, I have this idea. And he says, should we do it? And I said, let's not only do it, but let's do it right now. And they just had their first meeting in September. A lot of excitement was there. You know, the state societies are so important for what we do in so many ways, legislative and moving things forward. And they've been at our meetings for years and years, but we didn't have any formal process to incorporate them into our structure until now. So we have 8 representatives. These are executive directors of societies from around the country. They elected a leader of their committee. It's Rich Jones from Washington. Congratulations, Rich. And, you know, we're not always going to agree on everything. Of course, you wouldn't expect us to, would you? But we will agree that their input is important, and we're going to listen carefully to it. And I can tell you that during the private company reporting discussions, they were invaluable in the feedback that we got from them. So thank you so much. Let me mention one other thing. It has been just such a pleasure to work with Ken Bishop this past year. I've got to know him so much better than I did before, talking to him sometimes on a daily basis, being able to work with him, to visit many of you throughout the country, internally and externally with other organizations. What a fine man. I'm so pleased to count him as a close friend, and I'm going to miss that close contact going forward. We've issued a number of comment letters, some difficult ones, one on suspected illegal acts that came out of the International Federation of Accountants that was really tough. We've issued one and working on another one on the new audit report models that is going to be a substantive game changer in the audit profession. So we've done a lot. We haven't done everything. We needed to leave some things for the next group that's going to follow us. Carlos. Let me finish up here. Our public responsibility is rooted in fundamental ideals of integrity and fairness. We all hold to those great aspirations. As a young man, I was taught them by the likes of Leonard Spotcheck. We've seen disastrous consequences when ethical values are disregarded. On behalf of NASBA, my report to you, collectively, as the boards of accountancy, this past year we have been faithful to our core principles and ethical values. NASBA, as your membership body, has been vigilant in assisting you in protecting and preserving the public trust. As I wind up my last few hours as your chair, I have one final plea. Please recognize that your time to serve is so short and yet is so precious. You board members are unique. You wear invisible mantles conveyed through a democratic process to protect your fellow citizens. When your time comes to an end, like mine has tomorrow, make sure that you can look back and say that you have made a difference, that you have used your time wisely to protect and serve a public that trusts you. And so thank you very much. So we're a little bit ahead of schedule. If anyone has questions, now's a good time to ask them. I'm not sure that you would. Okay, I will introduce our next speaker then. We're next going to hear from Bill Balhoff, the 2013-2014 chairman of the American Institute of Certified Public Accountants. Bill is managing director and CEO of Postal Way and Netterville in Baton Rouge, Louisiana. As you would expect, Bill has been involved with many activities at the AICPA, including chairing the executive committee of the private company practice section. Among his many achievements, Bill is also former chair of the International Accounting Standards Board's Assessment Special Task Force. If we look back over NASBA's history, we can see many of its outstanding accomplishments were achieved because the regulators and the professional organizations and associations work closely and cooperatively to bring them about. And in that spirit, NASBA looks forward to working with Bill and the AICPA in the coming years. So, Bill, if you'd please like to come forward and tell us about what you have planned for your year ahead.